Good morning and welcome to NYSE Live. I'm Ashley Mastronardi. Equities are little changed as the S&P 500 enters today's session less than 1% from its all-time high. Investors remain hopeful that peace may be on the horizon between the U.S. and Iran, with ICE Brent crude oil currently trading at $95 a barrel. Shares of Oracle continue to rally, up more than 4% on Tuesday, following its move to buy fuel cell power from Bloom Energy. And early today, the NYSE-listed company and NYSX holding is looking to add 2 percentage points. NYSX is the ticker symbol for the Global X NYSE 100 ETF, and it tracks innovative companies. Here's what else is on tap this hour. Leaders from across the cybersecurity ecosystem gathered in San Francisco for the RSA conference in March. That includes Optiv CEO Kevin Lynch. And you're going to hear what he told J.D. Durkin about the current state of the battle against cyber threats and which industries are being targeted by cyber criminals. Meanwhile, NYSE-listed Roblox has just unveiled a new feature that aims to provide age-based content access and communication settings for younger users. We're going to have those details. And at 9:30 Eastern, NYSE-listed Viking Holdings will ring the opening bell nearly 2 years after it celebrated its IPO. Chairman and CEO Torstein Hagen is going to join me from the trading floor to take us through the company's latest achievements. But we begin with the markets, as we usually do here on NYSE Live. Major averages are coming off back-to-back winning sessions. Joining me now is Kenny Polcari. He's partner and chief market strategist at Slate Stone Wealth. Kenny, welcome.
Thank you for having me. It's always a pleasure for me to come home.
A pleasure to have you back. So we're about 30 minutes away from today's session. What are you going to be looking at most closely?
So you're going to look at certainly the follow-up to earnings. Bank of America and Morgan Stanley are going to be key, right? And there's a lot of eco data today, but I think the one that's most important is going to be the Fed's Beige Book. I think a lot of the other data that's coming out is just going to kind of be noise, because I still think that the focus is going to continue to be on the unfolding drama in the Middle East.
All right, yeah, and major averages have bounced back. There were talks and hopes of a deal between the U.S. and Iran. What do you think specifically is driving optimism?
Well, because I think, if you believe what the headlines tell you, is that Iran has kind of rethought the need to have a conversation right after last week's denial. They weren't going to do anything. No, we're not going to agree. I think now once we've blockaded them, and now we're going to start to, hurt them economically. I think the closure of their ports is worth about $430 billion a day to Iran. And so it's going to start to add up quickly, right? And so I think that they recognize that. I think they're also getting pressure from some of the other Gulf states to come to the table. And so I think there's a lot of optimism around it. It seems to be that everyone now appears to be a little bit more willing. Now, it doesn't mean we're going to have a deal by Friday. I think those negotiations will take a long time. But I think we're on the path, and that's what the market wants to see.
You've already said that the market is betting on a deal and that they're actually acting like it's already happened. Do you see that as risky?
Maybe a little bit, but I'm optimistic, right? So I'm not viewing it as a risk, because I do think we're closer to the end than not. So therefore, I think there's going to be a deal. I don't think it's going to drag on for months and months and months, is what I mean. So while there may be a little bit of risk that maybe it falls apart again, I think if it falls apart again, we just continue to blockade them, and then they're going to start choking. They're going to have to come to the table. So I'm more in the optimistic camp. I'm not really sure that there's that much risk left.
All right, and big banks have kicked off the latest earnings season, as you mentioned earlier. What are your takeaways so far?
So listen, they come out strong. I think one of the key things, and I was very, very curious about it, looking to see what these banks are going to allocate to their loan loss reserves account, because that's kind of the canary in the coal mine. If they suddenly up the amount of money that they're putting into the loan loss reserves, it suggests that down the future, the banks are seeing potential trouble. We didn't see that. The only one that really did that was Goldman Sachs. But Goldman Sachs isn't a bank like J.P. Morgan or Bank of America, right? And so yesterday, J.P. Morgan, they added modestly, kind of something that was expected. They didn't overdo it. So my sense is that these bank CEOs are not seeing a disaster down the line. Private credit that everyone's talking about is not going to be the disaster that some people think it's going to be. So I thought that was a big positive.
What is your, what do you think is going to happen this earnings season? What are your predictions?
I think we're going to have a strong earnings season, right? All suggestions are we're going to have a strong. We didn't come into the earnings season seeing a lot of downward adjustments. In fact, I can't think of any that were significant, right? And so therefore, I think the view is we're going to have a strong season. Now, depending on what happens with oil is going to dictate kind of how the rest of the year is going to go. But again, since I think oil this is closer to the end than not, I think oil is going to come back down. So I think that the economy, we may slow just a little bit, but then I think we're going to ramp up again. Remember, the big, beautiful bill is going to kick in. The IRS tells us that the average tax refund is approaching $3,500 this year, which is a fair amount for a lot of people. And so I think that's all positive.
Why does oil have such a big impact on the markets?
Well, look, because it really fuels the world, right? It fuels everything. It's transportation, it's manufacturing, it's, it turns on the lights, it produces all this energy that the world needs to live on. And so therefore, oil at $55 or $60 a barrel, where we were prior to this, was perfect. I think oil was right in the right place, considering where it needed to be with all the global demand. This certainly now, despite the conflict has caused obviously a problem. We've seen oil spike. That's going to cause a problem because it's going to hit people right in the pocketbook. Price of gasoline is up significantly. I was paying $2.95 in Florida, a month and a half ago. I'm paying $4.15 now. I mean, so that's a significant jump. My car went from $50 to fill it up to $85 to fill it up. And while I don't drive that much, someone that drives constantly and is constantly filling up their cars, that's going to hit them right in the wallet. And that means that they're not going to be able to spend money somewhere else, whether it's going out to dinner or it's buying that new outfit, whatever it is, something has to give. And so that's why, people are very concerned about where oil goes.
And how are you advising your clients when it comes to the recent market volatility?
So stick with the plan. It's been so interesting because you have some clients that get very nervous, very anxious about the start of this war. But, you have to kind of walk them through it. And I say, look, let's look at your portfolio. Let's see how you are balanced. You're well diversified. Okay, so some names are going to get hit, but there are other names in the portfolio that will offset that. So the typical defensive names, right? The energy names, consumer staples, utilities. Those stocks are all up on the year. You may have tech, which is down. You have other sectors that are lower. But if you're well balanced, you're going to have some sectors that are going to offset. Maybe not all of it, but it's going to offset. And now that, we're looking through this, those sectors that have gotten really beaten up, and you saw that yesterday, where did they go? They went after everything tech. And remember, tech has gotten really beaten up. All sectors of tech have gotten beaten up. And so investors found opportunity in those sectors.
All right, Kenny Polcari, thank you so much for joining us.
It's a pleasure to be here. Thank you for having me.
On NYSE Live. Coming up, leaders at March's RSA conference had plenty to say about the role AI is playing in the fight against cyber threats. Find out how Optiv is helping its clients win that battle next.
It means so much to stand here today on International Women's Day at the New York Stock Exchange. When I look around this room at the leaders, entrepreneurs, advocates, and change makers, I feel something powerful. True power isn't just building something for yourself. It's building something that lifts other women up. That's why I'm using this platform to highlight women-owned small businesses. Gloria once said that dreaming is a form of planning. I dreamed of building something of my own. Today, that dream has become a responsibility. Because the future of finance, leadership, and this economy is unapologetically female. I'm looking forward to ringing the bell and celebrating with you all afterward. Loves it.
we literally have changed the entire baby food industry. To all of these little kids who inspire us and make us want to build a better world, we're actually doing it.
You guys have been there since the very beginning. You deserve everything that happens today.
Welcome back to NYSE Live. Cybersecurity leaders gathered at March's RSA conference to chart the future of the industry and evaluate how evolving technologies like AI are transforming the battlefield. Take a listen.
Well, I think the risk environment, if we think about threat's a constant. Rather than think of that being sort of something that shows up and goes away, think of it as a constant that's inclining. I think it's this notion of insider threat is what I call it. So the adversaries are going to be the adversaries. They're going to do what they're going to do. They're very good at exploring all sorts of avenues to penetrate your environment. But internally, we have other things that are going on. And I'm not thinking of insider threat in the traditional way where someone gets some bad information on somebody and subrogates them and gets their credentials. I'm talking about this quieter adversary, which is complexity, where organizations have been doing what they do, trundling along, thinking they're investing in security, convincing their boards to invest once again, and boards yet saying, I thought this was seasonal, I have to do this every year. I think that notion of complexity is the real sinister agent here. We've got to help our enterprise clients, and that's where we're focused, on attacking that complexity. Reducing tool count, reducing expenditures on controls that are duplicative, not more, and really getting to that lower cost per capita of security, risk, and resilience. I think that's the bigger threat today. I think our expertise as a nation, as industries, as sectors, as companies, has grown over the years. If anything, we're getting better at what we do, as is the adversary. But I think in the spirit of that, we've industrialized something, and we may have lost some of that innovative spirit around how we go challenge the status quo and find better ways to do things.
What are some of the most common security gaps you see when you work with large enterprises?
So it's a great question. Thank you for that. I'm a zealot for this. I'm passionate about one topic. When I'm in a boardroom with one of our clients, what comes up over and over for me is that notion of complexity, but I tend to be an economics view of the world person, so I'll say the cost per capita of security, risk, and resilience. We should be, over time, seeing some increasing returns to scale where we can lower that cost per capita. And yet, we don't see that. We see clients talk about tech rationalization, we see talk of platform usage, but we're not seeing that cost per capita crest or come down. So to me, this is going to become an economic conversation, not only for the status quo, but how do I build the economic capability to go scale an AI-centric operation with a secure environment as well. So to get there, you've got to have a good understanding of where you are deploying your capital by area or control in your business. You've got to have a great idea of whether you're over investing in certain places, where, given your business model, you have more exposure and less exposure. And again, that requires almost a portfolio view of the world. We've invested deeply in that, by the way. Our Optive market system, which we're in our third year of investment in that, getting excellent returns out of that, allows us to have that reference architecture conversation with a client, to think about their investments, their expenditures, where they're getting a yield, think about where there's a pathway for us to simplify their environment, which again has a knock-on effect to their employees, to that training and expertise cycle I talked about, and even another part of our business where they might be utilizing us to manage some of that infrastructure, co-manage or even independently manage. So this notion of attacking complexity comes down to dollars and cents. And so we're really putting our dollars to that and our own AI efforts to that, where we can come in and help a client more rapidly assess and think about their real choices.
Are there particular industries that you're seeing be attacked by cyber criminals more often, more frequently than others?
I would say if you look at the threat intelligence out there, I'm not sure that they've found a favorite. I think if I had to look at it, I'd say, if anything, we've seen less of a bias and more of an expansionary season. I'll answer it a little more prospectively. The one I worry about the most is energy, and whether that's sort of upstream or downstream. I think about energy and its criticality in our environment. I mean, we've been talking about AI, and undoubtedly this week at RSA will be all about AI. But if you go look at the data today that's very pervasively out there of data center growth, on one level, we're building data centers all over in advance of this AI wave. But if you actually look at how many of those data centers are running at near to full capacity, it's a very small amount. You know what the single biggest constraint is? Energy. There's just not enough of it, right? So, and then think about your daily life and the differences in it today than just 5 years ago. You consume and utilize energy in a very different way today than you did 5 years ago. And if someone turns off the lights, you've got a very difficult day. And so I worry that that's that one single point of failure that could cause really big harm. So the attacks are everywhere. I worry that the adversary is going to figure that out. And I do worry that while the clients we serve, I think, have a very mature approach to that, from an information technology basis, from an operations technology basis, I think there's still a lot of work to be done.
Before I let you go, what should every CEO or board member better understand about the landscape of cyber risk today?
So I think everyone in this chair is probably driving to deliver shareholder value. And they're looking at every lever they possibly have to deliver that. And no doubt, whether it's the flavor du jour or it's a hot topic, but everyone's looking at, can I utilize technology in a different way and disrupt my industry or accelerate my progress and be a more productive, call it higher efficacy, better efficiency organization and deliver back more to my stakeholders, right? That's where our heads are naturally. And I think that's a great place to be. Whenever we're in a cycle like that, there's a tendency to say, well, let's go forward and do that. And I'll harken back to not that far back in history when we looked at cloud and were we going to utilize cloud and how would we utilize cloud? And when we did that, security was an afterthought. And I think we're on the precipice of doing the same inherent mistake, which is organizations will push agentic into production. There's still some lag there around how much is going from test to production and at what pace. But they'll do that with security as an afterthought, when I think this might be the time to actually think about what security could mean. Because the uses of what we're seeing, when we just take a security operations center as a focus, what we're seeing in terms of use of AI to distill out all the noise, to make signal intelligence cleaner, to get to actionable insights faster, the speed at both machine and human working together in concert is astoundingly positive, right? So this is that moment where, again, leadership, CEO should be involved in this conversation. The board should be aware of this. It is a capital-centric conversation. It's a strategy conversation. It's a leadership conversation. Don't go create great economic gain with massively unseen risk. We can solve both at the same time.
Thanks, Optiv CEO Kevin Lynch and J.D. Durkin for that interview. Coming up, NYSE-listed Roblox has unveiled a new feature geared toward its younger users. Stick around for the details.
The New York Stock Exchange is a cathedral of the capital markets. So there are a few places more fitting to consider the future of the American financial system than this one.
At the NYSE, we applaud SEC Chairman Atkins and the entire Trump administration for working to reduce the burdens on existing public companies and soon-to-be public companies.
I believe that we will ensure that the American story, which began in many ways just steps outside, is preserved not by memory or speeches alone, but by the courage of those who are determined to chart its next chapter.
When we talk about the titans of industry and we talk about the titans of finance, there's a reason that we're all coming together still after all these years to the corner of Wall and Broad Street.
We are ringing the opening bell this morning to celebrate the launch of 6 new ETFs by Direction.
We look forward to many more. I mean, today's 6, we're going to do hundreds more.
The New York Stock Exchange, the home of ETFs.
Welcome back to NYSE Live. On Monday, NYSE listed Roblox introduced a pair of new age-based accounts for its younger users, ranging from ages 5 to 15. The new accounts, Roblox Kids and Roblox Select, are set to debut in June. And joining me now is Eliza Jacobs, Roblox's Vice President of Safety Product Policy. Eliza, welcome.
Thank you so much for having me this morning.
Can you take us through the two accounts and tell us what is included in each one?
Yes, so for Roblox Kids, that's for our users 5 to 8, our youngest users. And this will combine a set of defaults for content, so what kinds of games they can play. Communication will be off by default in these games. And also parental controls. So parents will be able to, turn on individual connections if they want their 5 to 8-year-olds to chat with their friends or siblings. But other than that, no communication. And all of this is undergirded by our facial age estimation technology so that we know how old our users are and we can put them in the right account. And then for Roblox Select, that's our users 9 to 15. Similarly, we'll have communication and content defaults that are age appropriate for those groups as well.
And we understand the verification process is very thorough. Can you take us through how you're verifying and checking users' ages?
Yes, so we have a facial age estimation technology. This is a quick and easy face scan, sort of like how you open your iPhone with your face. And so you'll open up the app, you'll turn your head left and right. That's a liveness check so that we know that you're a real person on the other side of that camera. We will estimate your age, and then we will delete that data that we use to make that estimation. So the only information we're keeping is your age, and then we'll put you into the proper account.
And why was now the right time to launch these accounts?
Yeah, so we launched facial age estimation to control communication access in the fall, and we really saw that we were able to scale this on the platform. So over 50% of our users have already completed this process in order to access communication features. And once we saw that our community could really scale with this technology, we added on the content features and then sort of wrapped it all together in these accounts that include these age-appropriate defaults for each group.
Have you received any feedback on the technology from users or their parents?
I think some parents are concerned about the privacy implications, and that's why we want to be really clear that we delete this data immediately. Also, you're not required to complete the facial age estimation process to be able to play on the platform. So if you don't want to do it, you don't have to, but you won't have access to communication features, and you'll have a sort of more limited set of content until we know how old you are to put you in that right age bucket for age-appropriate content. But in general, our users are finding this to be very quick and easy. It gives parents, I think, more confidence that their kids are in the right experience, and it gives us more confidence that we really know how old our users are, whereas before, we just had a self-declared age, you just picked your birthday, and this is just categorically more accurate than that.
All right, and these new accounts, as I mentioned, will go live in June. What will you and your team be doing between now and then to further fine-tune these solutions?
Yes, so we're running all of our existing games through a 3-step review process. So we're reviewing the developer of the game itself, and then ensuring it has the proper content rating to be in either Kids or Select. So we'll be doing that process between now and June, and then it will roll out globally then.
All right, and how is AI playing into these accounts and across Roblox at large?
AI is really used to scale our moderation efforts. There's always going to be a partnership between AI and human moderation. And we want AI to do things that are happening at large scale, that are very repeatable, that we trust that the AI can do even better than human moderation. And then we keep our human moderation for more complex investigations, things that really require more context, and the human team can do those. So it's always a partnership, and we would never launch an AI system until we knew that it was at least as good, if not better, than the human system.
And I understand Roblox is also extending its parental controls. What does that look like?
Yeah, so we're extending parental controls through the select account, so through age 15 until you turn 16. And this will include controls to be able to block individual games, as well as to be able to control who your kids can chat with on the platform. And we're also introducing a new parental control that allows parents to approve individual games. So because there will be a more limited catalog in the kids and select accounts, we want to make sure that if your kid wants to maybe play with their older sibling or their cousin, a game that isn't in those accounts, and you feel comfortable with that as a parent, you're able to approve that individual games. So, just expanding the ability for parents to customize their kids' accounts. We want safe defaults and things that parents don't have to sort of engage with for their kids to get those safe defaults. But we also know every family, every kid is different, so parents can customize their kids' experience as they want to.
All right, thank you, Eliza Jacobs, Roblox's Vice President of Safety Product Policy, for joining us on NYSE Live.
Thank you so much.
Don't go anywhere. Viking, they're going to ring the opening bell next.
"16 years ago, an anonymous person released an idea onto the internet. No identity, no institution behind it, no marketing strategy. It was just a white paper and a challenge to everything we thought about money. What if money were open instead of closed? What if it belonged to everyone instead of being controlled by a few? Bitcoin survived every attempt to kill it, because the idea itself was stronger than the forces that tried to stop it. And now, today, inside one of the most iconic institutions in the world of finance, we honor a creator who never asked for credit, never stood in front of cameras, and ultimately stepped away so that the idea could stand on its own. Satoshi Nakamoto."
Why are we here? Because Magnum Ice Cream Company is an ambitious company. We're all about growth. And for growth, you need people and you need to have belief that focus on only ice cream will propel this business. These folks here in the room wake up every morning thinking about ice cream, and they go to bed thinking about ice cream. And that's why it will be a successful company that delights the world with unbelievable products.
Welcome back to NYSE Live. In just a minute, NYSE-listed Viking Holdings, they're going to ring the opening bell. Viking is on hand for the 2-year anniversary of its NYSE listing. That's when it went public. The company provides travel experiences through river vessels, ocean ships, expedition ships, and time-chartered river ships. One of its expedition ships, the Viking Octanus, was docked here in New York City on Tuesday before it set sail for Canada. Viking says its experiences include an onshore enrichment program featuring music and art performances, cooking demonstrations, and guest lecturers. Let's go to the opening bell right now. You just saw Viking executives ring the opening bell on the New York Stock Exchange. That is Tor Hagen, the founder of Viking. I'm going to interview him after the bell. He's up there with NYSE's Chris Taylor. It is an exciting morning as they celebrate 2 years of being a public company, and stocks are officially open for trade. Joining me now is Bob Iacchino. He is the co-founder at Path Trading Partners. Bob, welcome.
Morning, Ashley. How are you? I want to see that Viking interview because I've been looking for a cruise and haven't booked one yet.
Yeah, stay tuned to the show. I'm going to be speaking with him after you. So what are you watching most closely as trading gets underway?
Well, looking at it today based off the last sort of 2 days of price action, we're really seeing that markets believe the conflict is either winding down or has subsequently ended already. Now, I don't know how strongly I want to state that, but we are seeing an S&P about 1.5% above where it was when the conflict began. We had weakness in most of the indexes going into the conflict anyway, and the NASDAQ is about 4% over the level of where it was when the conflict began. Crude oil is back below $92, not where it was before the conflict began, but crude oil is going to take more time as it actually is a structural interruption, and that has to be worked out, and we both know that the Strait is not fully open yet. So I think no matter how you slice it, when you look at where yields are, yields again are much higher than they were on, say, March 20th. The 10-year was below 4% at that point, but they've stabilized. They're not rallying anymore. The yield side of it are not creeping higher. So we're seeing a stabilization that seems to me to be leading to volatility decreases and potentially moving us with a sort of, I don't know, let's go moderate to strong earnings season so far, although it's very, very early. We're looking possibly at a pretty bullish situation for stocks in my view.
All right, and as you mentioned, we have seen the S&P bounce back since the start of the conflict in the Middle East. What does this tell you about how investors are viewing the conflict?
Well, again, I think they're seeing it as at least over or on its way to over, or at least under control. I'm not sure, because I'm not a military strategist, where we are in this actual stage of the conflict. But again, there's been so many pauses and so many ceasefires. Now they're talking about extending this ceasefire. Some of the major players like China, Iraq, some of the other players in the commodities space are starting to ask both sides to come to the table. Another one is Pakistan, asking both sides to come to this table and at least get to a more permanent ceasefire. This is going to be good for markets because, again, markets just want to know where things are. Also, we had that sort of mild PPI data yesterday, and that is at least giving the inflation hawks a pause in terms of where some of the input costs are going to be going forward. You know, we've traded like economic data doesn't matter lately. It does matter because it's the baseline by which you build the conflict off of. So if the data is strong and inflation looks like it might have been easing, we can build in maybe 3.5% headline inflation, maybe 3% core. And while that's not where you want to be, we know that the market can survive on that. We know that the market can thrive at those levels as we see wages go up and as we see consumers get refund checks on their taxes that are somewhere in the 10 to 12% range higher than they were last year. And Americans will spend that money. We're just bad at saving. So that money is going right back into the economy, and that's going to give it a little bit of lift as we try to work this conflict out.
Right, and earnings season is officially underway with the big banks kicking it off. What are you taking away from what we've seen so far?
Earnings beats are what's happening on the headline. Guidance is mixed. So that's really what I'm looking at going forward. I want to see guidance get better, and I don't see CEOs coming on earnings calls and saying we're going to do a bang-up job while the conflict is still the main thing in the headlines. So again, if this thing is ending, I think we'll see new highs before the second quarter is over. I'm talking new highs on the index level. But based on the sort of questions we have at this point, we're looking more at individual stocks than we are at the actual indexes because we are early in the earnings season. And those warnings can really affect stocks. We saw that last earnings seasons where there were matches and beats in the headline numbers, and then CEOs were warning about weakness. We're looking for the 6th straight quarter of double-digit growth. And the estimates right now, according to FactSet, are somewhere between 12.8% and 13.2%. If you look at the average beat, the estimates versus where stocks come in on the actual earnings reported, you're looking at about 6 to 7% there. That would put us somewhere at 19%. And that would be the strongest earnings performance since about Q4 of 2021, where stocks did collapse at that point, but inflation was a lot higher.
And I understand that you're also keeping a close eye on gold and Bitcoin. What are the latest moves across both of those signaling for the economy?
Well, gold and Bitcoin were both performing well as rate cuts were the next step for the Fed. So right now you're looking, if you look at, for example, the CME Fed Watch tool, which is the easiest place for your average trader to go see what's priced into the market, they're not pricing in a rate cut until late 2027, but it's still a cut that's being priced in. You're looking at no change all the way through 2026, first quarter no change of 2027, second quarter no change of 2027, but then you start to see the probability shift, and it is shifting toward a cut. So what you're seeing, for example, in gold's price action, it corrected, it fell, but now it's moving sideways to slightly higher. If that starts to collapse, I'd worry a lot more about inflation. People think that gold is an inflation hedge. Gold is an inflation hedge when the Fed is not fighting inflation. When the Fed starts fighting inflation, that inflation hedge that gold is supposed to be doesn't work very well. Same thing for Bitcoin. Bitcoin is kind of reactive to the NASDAQ. For Bitcoin to actually be a safety asset, it has to lose its negative correlation to the NASDAQ. And by that, I mean it has a positive correlation to the NASDAQ on the downside. So if the NASDAQ starts falling, Bitcoin starts falling. If NASDAQ rallies, Bitcoin rallies. So it doesn't really have those non-correlative properties that people talk about or look for that gold does have.
All right, thanks Bob Iacchino, co-founder at Path Trading Partners, for joining us on NYSE Live.
Good to see you, Ashley.
Good to see you. Still to come, physical AI security company Verkada is expanding its U.S. footprint into 4 new markets. Its CEO is going to join me in studio to explain what went into the move. And the space industry is riding the momentum of this month's Artemis II mission into this week's Space Symposium event. An industry expert joined our very own Christian Scholler to break down what's next. Plus, Viking CEO Torstein Torhagen is going to join me from the trading floor to discuss Viking's strategy since listing on the NYSE nearly 2 years ago and what it has planned for the next 2 years. Stick around.
I'm just so honored and so grateful to you, Lynn, for welcoming us to announce our Time Person of the Year, the architects of AI. I want to take a moment to welcome Chris Lehane. You have been an incredible driving force, making AI accessible to everyone, and we are so glad that you are here with us today. We are focusing on the leaders and the people and the humans that are imagining and building this future that we will all be living in.
We had somebody ask us recently, why are you going out at this time of the year? The reason we're doing this is for our people. It's not about us. Our motivation for doing this transaction is to make this a better place for the next generation. We have a stewardship responsibility to our people to give them a professional and a financial opportunity that's better than what we have. And what I am very proud of is the team that we have here. This is a true partnership in every sense of the word.
Welcome back to NYSE Live. In late March, AI-powered physical security company Verkada announced that it's launching 4 new offices across the U.S. in Atlanta, Chicago, Dallas, and Los Angeles. Verkada is also expanding globally with a new international hub in Dubai. Joining me now is Verkada co-founder and CEO Philip Kalizan. Philip, welcome to the New York Stock Exchange.
Yeah, thanks for having me. Excited to be here today.
So excited to have you. So what excites you about these new markets?
I mean, it's an amazing opportunity to bring Verkada all around the world. Verkada is solving a very important problem in the world, which is physical safety in the real world, and we're solving that problem with AI. That problem is relevant all around the world, and we're so excited to open these new markets.
And can you talk about the capabilities of Verkada's AI in physical security? What are some of the use cases?
Sure. So look, Verkada solves the problems of physical safety in the world. So first of all, we use AI to understand what is going on in the real world in real time as it's happening. And then we have outputs, so we can actually control things like door access, alarm systems. We can help first responders to manage the situations more efficiently as they unfold.
And how does expanding bolster your AI security footprint?
Yeah, I mean, look, it allows us to bring the footprint to more markets, right? So we're closer to the businesses, we're closer to serving more use cases around the world. And frankly, safety is a problem that we see in all areas of the world.
And I understand that last year you announced a $5.8 billion valuation following an investment. Can you talk about what that signals for demand in the market?
Yeah, look, the market loves what we're building. I think bringing AI to physical security is fundamentally shifting how physical security operates. It's bringing a new wave of being proactive in the market, so being able to respond to cases in real time. That is what got Capital G, which is Google's investment arm, excited about investing in us, and that's what makes them believe we're a generational company for years to come.
What did that mean to have them as a partner?
I mean, it was so exciting to have them as a partner. It's it's Google. It's one of those companies that you grew up and they're just legendary. They're of course leading the charge in AI. So I was thrilled to have them as a partner in the building of the company.
And I understand you think there's a really big opportunity to bring AI into the physical world.
Yes.
What would that look like in practice?
Yeah, I mean, let me give you an example, right? So think about logistics use cases, think about operational efficiency. Maybe I'll give you an example of a customer. Think of a logistics company that's processing trucks, bringing in aggregate, like literally dirt and soil into facilities, right? How does that work today in the real world? Well, the truck might pull up and you have a receptionist sitting at a desk, collecting information. That's highly inefficient. What we can do there is we can use cameras to recognize the truck, the license plate. We can automatically open the gates. We can process the information from the truck. So we literally have cameras that will scan the dirt that's on the back of the truck, decide what type of aggregate it is, do that automatically, do that in seconds, save the time for the workers, and just dramatically increase the efficiency of that type of logistics business. And so, that's one example, but we're seeing these type of operational use cases all across different industries, and it's just phenomenal to see the quick progress that AI and computer vision is bringing to these different industries.
What has your customer feedback been?
The customer feedback is phenomenal. Our customers love our product. Our NPS is very high at a 54, far above competitors in our industry. And they just love the simplicity of the platform, right? Our software combined with AI is saving people hours and hours of labor. It's making them more efficient, and it's making first responders fundamentally better at doing their job.
And how is this physical AI helping your customers?
Well, it's helping the customers by making their operations safer and more efficient, right? If you think about, what it takes to protect facilities, a lot of it involved many, many hours of human labor, right? Like take a big facility with maybe a large perimeter fence. What's your best next alternative to protecting that? Well, it's having guards that maybe patrol the perimeter. That's a lot of hours of human labor. And there's a shortage in that market. It's hard to hire guards. It's hard to get the workforce to do that. Today, with cameras, we can automate a lot of detections. We can find things like people climbing fences or using dangerous objects. We can actually use AI to understand who's doing one of these activities that's maybe nefarious in nature, and we can describe and deter that person using AI, right? We can have a speaker that will generate a human-sounding voice with AI and tell the person that they're being watched, that they're trespassing, that they should go away, and that in many cases solves the crime before it even happens.
All right, thank you, Verkada co-founder and CEO Philip Calazan for joining us.
Thank you so much.
At the New York Stock Exchange.
Yeah, thanks for having me.
This past Friday, the Artemis 2 mission successfully splashed down after its 10-day mission around the moon. The achievement also came ahead of the 41st Space Symposium currently underway in Colorado. Our Kristen Schuller spoke with payload managing editor Jacqueline Felcher ahead of the splashdown to find out what's next for the Artemis program. Check it out.
Artemis 3 is set to launch next year. That will be a rendezvous mission in space to try to attempt to rendezvous between one or both of the commercially built landers, which will hopefully bring astronauts down to the surface as soon as Artemis 4, which is set right now for 2028. Obviously, we're all well aware that schedules can slip in the space industry, but that is the aggressive timeline laid out by NASA Administrator Jared Isaacman. And after we get that first crewed landing, as you said, NASA is going to be off to the races. They have long-term plans to build a lunar base with rovers and in-situ manufacturing. Last month, NASA Administrator Isaacman laid out this really aggressive vision to put a semi-permanent footprint on the moon. That's really the difference with Artemis, is that people are going back to stay versus just the short missions that characterized Apollo.
I do want to drill in on that just a little bit here, Jacqueline, because that's what has stood out to me the most, right? With Jared Isaacman now leading NASA here. He was formerly the leader of an NYSE-listed company, Shift4 Payments, but just the velocity of now goals from here that's picking up. I don't think we've ever seen anything like this, have we?
Yeah, I was actually at NASA headquarters in DC when he announced all these changes a couple weeks ago. And it was dizzying for everyone in the room. Every panel, officials came out to talk about their portfolio, and it was another major change, Industry leaders are really definitely excited about the opportunities and the enthusiasm and the speed, but there's also a sense of no program is safe. Isaacman canceled the Lunar Gateway, which was set to be a space station that was orbiting the moon. Pieces of that hardware are done. It was something where the U.S. was working very closely with international partners. And even that, Isaacman has been somewhat ruthless in his pursuit of this lunar architecture, saying we're going to cut anything or anyone that's in the way, taking no prisoners.
Okay, Jacqueline, we're going to be following that closely. I'm excited to see this splash down, but I also want to talk to you about the Space Foundation Space Symposium, because that kicks off next week in Colorado. Set the scene for us and what we can expect.
This is one of the largest, if not the largest, annual gatherings of the space industry. It has a very large military and government presence, but also almost everyone you can think of in the space industry, and a number of companies that are, space adjacent or looking to use the space industry but aren't in it. And this year is really the first that the Trump administration is going to be able to make its case for space in this format. Jared Isaacman will be there, as will a number of Pentagon leaders and NASA leaders. For last year's symposium, NASA had no administrator yet. I don't believe we'd seen a budget. This year, the Trump administration has put forward 2 budgets. They've put forward this big ignition plan to have these significant changes to the lunar program. And Isaacman is there to really speak to the community. So this is their first chance to make a splash at this show and say, here's our vision, get on board.
Yeah. Yesterday, you published the State of Launch 2026, which has been on Payload's website. What sticks out to you from this?
Yeah, there's a lot of demand in the launch industry right now. And I think it's easy to say, well, of course the launch companies would tell you that because they want to drum up business and create the scarcity mindset. But we also heard it from customers saying that there are payloads waiting to get manifested on spacecraft, that there is a struggle to get spacecraft into orbit. So we're definitely still seeing those bottlenecks. I know a number of years ago, people talked about, is the launch industry oversaturated? I think right now we can say that is definitely not true, that there is a lot of demand for these new launchers that are coming online. The state of the launch story you referenced is actually one in a series. So we also looked at Earth observation, in-space manufacturing, and satellite communications before this big show where everyone gathers together. We do this annual look at kind of the challenges and opportunities across the major sectors of the space industry. And I mean, across all of them, it's an exciting time with a lot of change and a lot of enthusiasm.
I know 100 years isn't much in the New York Stock Exchange laurels, but we're very proud. First U.S. airline to reach 100. The resilience and the determination to move forward despite all odds is something that I think we're all proud of. We've had a great opportunity to celebrate this year. The power of obsessing on our customers is what makes Delta really great. And my superpower, I'd like to think, is obsessing on them, on these people, so that they can go do the job. And it's not just me, it's our leadership team in terms of making it happen.
It's a bit of a pinch me moment. I mean, everyone's here. Here we just rung the New York Stock Exchange bell. In a lot of ways, it's a dream come true. When you walk around the NYSE floor, it's just emblematic of the American dream. Look, if I can do it, others can do it too. So believe in yourself, work hard, be the best you can be every day, and it compounds.
A plan to go and change the way people fly, it is the next step. When we look back at what we promised to go do and then we go do it, it'll be the foundation of our business that builds us to the next step. And it's because of the people here and what you all did, which was enabling greatness.
It's a big day for many of us.
In life, I'm reminded that it's not about the destination, it is truly about the journey.
Will not change. We will always obsess about our customers. It's about long-term value creation for the shareholder. Thank you very much and good luck.
Earlier this hour, Viking Holdings rang the opening bell to celebrate 2 years since going public on the New York Stock Exchange. Joining me now is Tor Hagen, Chairman and CEO of Viking Holdings. Tor, welcome.
Thank you. Nice to be here.
So nice to have you. What was it like to be up at the opening bell podium celebrating this milestone?
It was very good. Of course, we were 2 years ago too, which was more important because that's when we got off to the races. But it's been very good to be here. Thank you very much.
All right, and what has stood out about your journey so far? 2 years listed on the New York Stock Exchange, 2 years of being public.
Well, we tried to make some promises to our new shareholders. And of course, being a public company has a lot of obligations. But we said there are a lot of things we promise not to mess around with when we